Hey, how's it going? Bill Lethman here for Money Evolution. In this video, I'm going to be talking about the biggest reasons to consider doing a Roth conversion. So if you've been watching me on the channel for a while, you know I talk a lot about tax strategies and especially Roth conversions because it's been one of our more popular topics. So in this video, I'm going to be talking about what I think is maybe the biggest reason for doing Roth conversions. But real quick though, before I get into the content of today's video, if you're watching this and you'd like to learn more about taxes or some of the things that we do, check out some of the links down in the description below. You can head over to moneyevolution.com, check out some of our free resources over there. And we're going to be doing a free live stream tax presentation coming up on October 17th. We've been doing about one of these every month on different topics. And so we'll have some links down in the description below for that. If you're watching this after October 17th, we'll have a link probably to our replay there. So let's jump right in. So I believe that the biggest reason for doing Roth conversions, there's probably many, but it's really what is that future tax bill going to look like? And specifically, the thing that may drive that tax bill is going to be your required minimum distributions. And that's the age that you get to where the IRS finally says, okay, you've gone long enough without giving us any tax money. You need to start withdrawing some of that money from your traditional retirement accounts and start paying taxes on that. They made a change here with the Secure Act 2.0, and now, depending on what year you were born, it's going to be either age 73 or age 75. It's age 75 if you were born in 1960 or later, and if you were born before 1960, it's going to be age 73. But again, for many people that have been putting money away into a traditional retirement account for a long time are starting to realize that they're maybe getting some pretty large balances. In fact, actually right before this video, I recorded a little bit of a hypothetical illustration so you can see kind of how that works and what that balance may do to what that required minimum distribution could look like here. So basically, to really answer this question and really see if these required minimum distributions are going to be a problem, we need to kind of ask ourselves a couple of questions. Number one is we need to know what our accounts are going to grow to, and that's something that's going to be a little bit, not a little bit, it's going to be a complete unknown because we just don't know how the financial markets are going to go. So the rate of return is, of course, going to be a factor there. Inflation is going to be another one, and so over time, the tax tables themselves will actually change and evolve, maybe go up a little bit every year with the rate of inflation. That's been the way that they've done it historically. We also have the expiration of the Tax Cuts and Jobs Act, and that is expiring at the end of 25, which means 2026 will be the first year without the Tax Cuts and Jobs Act. I'm hoping that we get an extension of the Tax Cuts and Jobs Act because, as I've talked about in other videos, I think they really lowered the income taxes for pretty much all tax filing statuses, and I made a couple of videos about that. So the expiration of the Tax Cuts and Jobs Act, and then we also need to know some other things here too. So if you're still working, we need to know what's happening to those retirement accounts. Are you adding money to them? How much are you adding between now and, let's say, the time you retire? Because that's just going to be kind of twofold. One, you're going to have the growth of the assets you've already accumulated, then you're going to be adding on top of that. So what's going to be happening while you're working? What's going to be happening during early retirement? And that's something that I've talked about in a lot of other videos. I think it's really, for many people, a really good opportunity to do some really heavy tax planning there and taking advantage of some tax optimization because a lot of people are in a little bit of a low tax bracket or low tax years there in early retirement. But are you withdrawing money? Okay, so that would be something to look at. Then you might have where your income sort of normalizes a little bit there, and that's what I call well, I refer to it, the Social Security refers to it as full retirement age, so that for most people is going to be age 67. You may not take Social Security at 67, you may take it earlier, you may delay it a little bit, but whatever that looks like, once the income starts to normalize, maybe you're taking bigger withdrawals in that early part of retirement, but those level off a little bit at the full retirement age. And then finally, that's going to help us to determine what that balance is going to be in your retirement accounts and what the required minimum distribution is going to be. So I know myself, when I first started putting money away into these traditional retirement accounts, the idea was always that you're going to put money in, you're going to get to deduct that off of your income taxes right now today, and then you'll pay taxes later in retirement when you're going to be in a much lower tax bracket. And obviously that seems to make sense because when you're working, you're making a lot of money. Hopefully you're making money. You're making some money through earnings. But when you retire, you're not going to have any money coming in. Maybe you're lucky to get a pension, eventually Social Security. But so the logic, of course, was, of course, I'm going to be in a lower tax bracket once I retire. But a couple of things really started to change since maybe when I started first started putting money into retirement accounts, which was in the early 90s. Our tax brackets have pretty steadily gone down. We've had several major tax legislations, and with the exception of that brief time when Clinton raised taxes for a brief period, and then he very quickly pulled that back and lowered taxes, through the last 30, 35 years or so, we've been steadily lowering our tax rates here. Now we have a sunset provision built into these current tax rates, the Tax Cuts and Jobs Act, so we may see a little bit of a tax increase there, but it's still probably going to just revert us back to what it was a couple of years ago there. So again, this idea that our tax bracket is going to be lower in retirement is not always the case. The market and the economy has done very well over the last 30 years. So many people have maybe accumulated balances in their retirement accounts that maybe their younger self would have never maybe dreamed that they would have that kind of money in there. And so that's becoming a little bit of a concern or an issue for some of us. So anyway, yeah, kind of looking forward to, what is that future tax rate? And that's really what it all boils down to. What is my tax rate today versus what is my tax rate going to be in the future? And then looking at some strategies that you can do. I talked about this in another video recently, but you can change up where you're contributing to some of these retirement accounts. And if you've been just still putting money into those traditional retirement accounts and you are recognizing that you're going to have maybe a big tax bill down the road, you can change up that contribution. I know in the short term, it may appear to be a little bit negative because you're paying more taxes and maybe you don't see as much in your paycheck there, but contribute to a Roth instead of a traditional. Again, I took tax accounting in college, and one of the things that we learned through all of the whole semester, all the different case studies that we worked on, the goal for most of this was really how can we push taxes out into the future? That was always considered a success. But now, one of the things that people need to consider is maybe paying taxes sooner and sort of using this tax arbitrage to take a lower tax rate today versus maybe something that could be higher in the future. And one of the ways to do that is Roth conversions. And I'll put some links down in the description below for that too, but we've got some great resources on that. We've got a whole Roth strategies case study that we kind of outline, I think about 6 different strategies that we do for clients that can help them do those Roth conversions. So thinking about where you're contributing, and then when you go into retirement, there's a whole strategy designed around taking withdrawals and which account to withdraw from first and how to structure that in the most tax efficient manner. So really kind of boiled into all of this, really what we're talking about is having a foundational financial plan, however you're doing that. If you're just doing it through some spreadsheets and legal pads and things like that, you can use a financial calculator and probably figure some of this stuff out. But as your situation maybe gets more and more complex, more moving parts, sometimes it can really be hard to keep track of and understand how all of those different moving pieces work together. And quite honestly, that's a lot of the phone calls we get. That's a lot of the people that we get reaching out to us is they've been working on some of this stuff on their own and trying to figure it out and running into some roadblocks and realizing there's more to it than what they've been able to figure out. So we have a couple of programs that can help people with that. One of those is our self-guided, more of a DIY experience. It's called the Retirement Time Machine. But really, we're actually in the process right now of kind of revamping that a little bit. So we're calling it the Retirement Time Machine 2.0. And the goal with it is really just to get you as fast as possible to a completed financial plan. So really started off as more of a course, but really it's a program that helps you to build a financial plan using the same high-level software that we use for our regular clients that we're doing the high-end financial planning for, but you're building that plan yourself, and then through some instructional video, helping you to not only just get the information in there and with you every step of the way there, but also how do you interpret those reports and understand, okay, I'm looking at this cash flow report, I'm looking at this tax report, what does it all mean, and what are the decisions that I can make based off of that? So really try to take you from from start to finish on that. And then what we've been offering here for limited time here is you're also going to get a one-on-one meeting with one of our advisors that can sit down with you. Usually over Zoom, typically, unless you're in Bloomfield Hills, Michigan area, Metro Detroit area, but over Zoom, and then go through your plan and make sure you've got the inputs in there correctly, give you some guidance on some of those reports, and then they can run some additional scenarios for you so you can really understand that. And then, of course, we have our high-level Money Evolution plan that's a one-on-one. You're working with me directly to build out your plan and having multiple meetings to kind of run through every scenario we can think of, and then giving you written actionable ideas and strategies that's specific to you and your situation. So we'll have some links down in the description below. I'm just realizing I made that a little bit more of a plug than I intended to, but thanks for watching the video, and reach out to us if you have questions. Check out our moneyevolution.com website. We're really trying to build that out to just be a free, comprehensive financial resource covering a whole bunch of different topics. And then check out our live streams. They're completely free to attend for anybody. We've been doing about one every month, and this month in October of 2024, October 17th, we're going to be doing one that's going to be a deep dive on taxes, and then the other upcoming ones are going to be on Social Security and Medicare, healthcare and retirement. We've got some other things planned for us as well. So hey, thanks again for watching. Make sure you hit that like and subscribe button, and look forward to seeing you in one of our next videos. Thanks.